Hey guys, this is Greg McLeod, the CEO and founder of the Elite Traders University and the creator of the Pip and Run strategy. And guess what? It's time for a Pip and Run market outlook. And this is for the week of March 25th, 2019. I hope you had a great weekend and look forward to a great trading week. And we're going to discuss my forecast for the market. We'll see what this crazy market's going to do. After the Fed decides to leave rates unchanged, we saw a massive drop in the U.S. stock market, 460-point drop. We also have Trump being almost exonerated, not exonerated, but basically they found no wrongdoing in colluding with Russia as far as possible manipulation in 2016 election. So we'll see if the market really reacts positively to this good news, because the market doesn't like indecision or any type of drama. And so if this maybe drama ending, we could see some type of a relief rally. So it'd be interesting to see if it's a risk on or risk off. Okay, but before we get started with the juicy details and find out what the market will be doing this coming week, we're going to look at the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading, and make sure you understand that there's no recommendations for any securities or other instruments being presented during this program. Okay. And for those of you brand new, don't know who I am, my name is Greg McLeod, and I'm a 23-year trading veteran and former currency analyst to one of the largest Forex brokers in the world. And I've also traded everything from options, Forex, crypto, stock options, futures. And I've also spent 16 years as a public education instructor. I have a lifetime teaching credential from the state of California, and I've worked at a prop trading desk and a top-tiered U.S. bank. And I've trained thousands of traders just like you in my Pip and Run Forex scalping system. This is a system where we get in and out of the market quickly, harvesting profits at will. Okay, and I've also developed a number of indicators, and I'm a published author with articles all over the internet that's being used to help traders just like you. All right. So what is our objective today? Today is our, we, like all the other weeks, we look for create a weekly game plan to develop a Forex game plan, a strategy map, which we can follow. And I'm going to have a special surprise for you at the end. I'm going to show you a couple of summary things that you'll really like. Because the key is identifying the best pairs to trade for the week and the best direction to trade as well. Okay, so we're going to talk about that. Now, this is our agenda, and we have a pretty ambitious agenda. I'm actually going to have two extra currencies that I'm going to stick in here too, and I've dubbed those the Apocalypse or Armageddon twin pairs. And we've seen them move, and it looks like they're going to move even more. And I'll tell you which direction by how much too in the next couple of minutes. So make sure you stay tuned to the end so you'll be able to see. Okay, so we're going to talk, of course, about the U.S. dollar index, a basket of currencies versus the U.S. dollar. Also, we're going to look at the euro, which is the most widely traded financial instrument in the galaxy, in the world, is the euro dollar. And then the next we'll talk about the pound dollar, and also discuss some of the Brexit things that may come up. There's another vote coming up. So we'll see what will happen there as well. And it'll be surprising. I'll have a surprise for you about what you actually think may happen, what the crowd thinks is going to happen, and what the charts are actually going to be telling us, okay? And then the Australian dollar, and usually Australian dollars are happy, sunny currency. When it's going good, that means everything is good in the world. But the moment it's not doing so well, it kind of tells us that everything is not doing so well, okay? There's a way of trading that as well. And then we'll look at the dollar CAD, and a big shout out to Kevin Flores, who gave me a call on the phone because I took vacation. I didn't post my weekly presentation, my outlook last week. And so I apologize for not doing that, but I took some little R&R at South Padre Island, and I got to kick back and relax and head over to famous Pier 19, where I got to get a pirate hat. Put on my pirate hat here. Harg, I'm a Pip pirate. Arg, okay. And so South Padre Island, and relax by the beach with the condo with my kids and my wife, and just enjoy the beach and some great barbecue and some great seafood down there too. Pier 19, go down there. It's the pirate, the famous Pirates Pier 19 restaurant and bar. Okay, and it's like in the shape of a pirate fortress. You want to go there? Okay, so Now, Kevin called me up. He goes, hey, dude, I didn't get your video, man. I don't know what to do about this dollar CAD. And I said, dude, with the Fed announcement, you probably thought, let's short the dollar, right? Well, guess what? It was kind of a fake out, and we'll talk about that. I'll tell you about that. But Kevin got on the phone and called me because he didn't get my analysis. More power to you, Kevin. Okay, and we're going to talk about gold and silver, which is actually doing something pretty interesting too. And we'll look at oil. We'll look at Brent and WTI as well as the S&P 500. And we'll talk about the economic releases. Of course, we'll start that first. And then we'll also look at some world headlines that may be shaking with the market. So we'll see what's popping, what's hopping, what's dropping, and what's not. Okay, before we get started, though, I want to tell you about and invite you to join the Pip and Run Forex Scalping Boot Camp. It's a 12-week boot camp that will equip you with all the tools necessary to effectively scalp the market and take profits out at will. And I don't know how many of you guys have trouble with entries and exits and staying in the market too long, overstaying your welcome. You know, the Forex is like a big street that's filled with money. Money's scattered all over the ground, right? And there's traffic going, and you run out in the middle of traffic, and then you gather up that money, right? And then what happens is you stay on the street too long, and you get hit. You get run over like a squirrel, and you got like tread marks across your back. Why? Because you stayed in the market too long, or maybe you're in the wrong lane, facing the wrong direction. Okay, and so the Pip and Run method and our strategy and the whole program will help you to trade better. Why? Because we have a series of great features that will help benefit you in your trading. You're going to be working with me. I'm going to be looking over your trades, making sure you're not doing anything stupid, and then helping you look in the right direction and trade like a professional instead of like an amateur, right? You don't want to stop making this trading stuff into a hobby. Hobbies don't pay anything, right? You can play baseball with your friends, and that's a hobby. But you can play for the major leagues, you can get millions of dollars. Why? Because you're that good. And so the reason why you're not making money in your trading is because you're really not that good. But if you work with someone who is good, you can get better, right? That's the way that the world kind of works, you know? We find someone who's better, and then work with them, and you get better. And that's by being with me on the live calls. That coaching call will help you gain the experience. You can benefit from my 23 years of experience. You don't have to wait like 23 years for you to get good, right? I also have a community that you can be part of, the VIP Forex Scalpers chat room, chart room, where we're all talking about the Pip and Run strategy. Where we're supporting each other, finding different trades, and then looking at the market and looking at different currency pairs. So you're having a group. You're known by the 5 people that you hang around with, and maybe your dog doesn't want to hear about your trading, your wife doesn't want to hear about your trading, and neither does your best friend. And everyone's waiting for you to become a millionaire before they want to talk to you. But it's gonna be too late, because when you're making the money through this course, you're gonna be saying bye bye. I don't want to talk to you either. Not really, but you know, be nice. Okay. Then we'll have access to 10+ video modules, so you can watch this at your leisure, rewind, play the videos, and then the videos break down the strategy into steps. You can watch those videos over and over and over again, and you can watch them at work. You now walk them at work. You watch them any time you want to. Also, I'll have a 42-page strategy book. And some people like reading. We have a strategy book, ebook. You can read it on your Kindle or read it on your tablet, and then you can learn the strategy as well. We also have a premium email support. If you have any questions, you can email me or my staff, and we'll respond to your questions and get you on the straight and narrow. We also have a bonus one-on-one private coaching calls. You'll be able to call me on Skype directly, and then we just get honest, talk turkey, and get you. Then all you need is a voice, someone you can talk to get your trading on the right track. Sometimes that's all it needs for you to get outside of your own head. Okay. Then the Pip and Run secret indicator templates and those that I don't really normally show on the videos and stuff like that, you'll be able to get access to those as well, and you'll be able to plug them into either MT4 or CTrader, and you'll be able to really recognize the 10 different strategy patterns and cycles that I actually show. Now, there are only 3 spaces available for our season 4 for coming up in this April. So make sure you go ahead and to register or sign up. Call me now, or actually go ahead and go to this link here. You can go to www.elitetradersuniversity.com/apply, by application only, because we don't want jerks. Or I know you're not a jerk, you're cool, because if you're watching me, you're probably cool. Usually people are not cool if not watching me, but if you're cool, go ahead and click the apply. We'll talk. We'll see if we can work with each other. Give me some hints and see if it will make sense for us to work with each other. You'll talk to a member of my team, and a member of my team will be able to like kind of be the gatekeeper, kind of like, okay, this guy is cool, we can let him in, okay? That way we can keep the group a really positive, uplifting group of people. I've got some of the best students, the best community that you can ever be part of, because we really are selective about who gets into it, okay? So again, elitetradersuniversity.com/apply if this sounds like an opportunity for you to transform your trading and change your life. Okay, so let's get to the business. Let's look at the charts and look at the news that's going on. So give me a pause and we'll flip right over. Okay, we're back, and we're going to go right into my secret weapon here, my top secret tool for trading the market. It's my Forex heat map. It's an arrangement of currency pairs by percentage change, but it's a lot more than that. And we're going to go ahead and log in. And you click the members login button. You go to myforexheatmap.com. That's myforexheatmap.com. You can get a 7-day trial for only $1. So you can go ahead and sign up for that. And then I'll go ahead and log in. I'm going to access, and there's different things here. The economic calendar, the MyForex heat map, that is the mainstay, and the market is warming up. But we can see in the top spots we have pound versus Swiss, pound Kiwi, in the top spots up 0.17%. We also have the UMAX up there, and also the dollar Southeastern Kentucky. Well, not really Southeastern Kentucky, it's Swedish kroner. And then we see what's trending down. This is an arrangement of pairs by percentage change. As they change, these tiles will shift and move. And we see what's downtrending in red. We see euro yen. The yen, we have repatriation flows. The Japanese fiscal year ends March 31st. So we're going to find a lot of those yen pairs actually trending down. They're going to be setting up some great shorts. I know I'm going to be talking about dollar yen. I'll tell you about where I think it's going to go. And but euro yen is already showing up down here. We see Turkish yen down there. Kiwi yen also trending down as well. Norwegian kroner. Norway just raised interest rates. They hiked. And it's really interesting how they hiked when a lot of other countries are either cutting or leaving rates unchanged because they believe that the global economy is weak. And that's why we saw the stock market tank 400 points when a lot of people thought, Trump wanted to, Powell, Fed Chairman Powell, hey, you're raising rates and you're going to hurt the stock market. You're raising rates, you're going to hurt the stock market. And then Powell goes, oh yeah, well, let me show you something. I ain't going to raise the rates. I'm going to raise them for the rest of the year. How about that, Mr. President Trump? And guess what? The market goes, yeah, that's so cool. No rate rise in 2019. It rallied initially, right? But then people go, well, why didn't he's not raising rates? Well, why? Oh, the global, what's he afraid of? Is it the global economy? Maybe the global economy is going to collapse? This is just like 2008 when they didn't raise rates. And then they start with the negative rates. And then they get quantitative easing with Ben Bernanke. And oh no, I'm having a flashback. Sell, sell, sell. And the market crashes. Because when an economy is strong, guys, ladies and gentlemen, that when the economy is strong and people think that inflation is coming because of a good economy, then rates naturally go up, okay? The Fed will ordinarily hike. Our interest rates, normalized interest rates, are about 4%. We're not even normalized yet. Okay, forget about hiking. We're just normalizing. So people say, we're going to hike rates. No, we haven't gotten to normal first. After normal, that's considered a hike. We're just trying to get back to normal. I mean, we're not normal yet. We're at 2.25%, and these are historic lows. When the economy is strong, interest rates are going up. So when he was hiking interest rates, it was a sign that the economies are strong and the stock market rallies. But then if you cut a lot, or don't raise, and you don't raise for a whole year, that just says, oh man, this is bad. Buy bonds, buy the dollar. That's why dollar CAD rallying, euro dollar getting crushed, Aussie dollar getting crushed, right? The risk currencies are getting crushed. They're all being sent down. Aussie CAD. But CAD, we have oil going up though, because the production cuts in OPEC. We're seeing oil actually rise, and that's holding up the Canadian dollar. But Aussie, New Zealand currencies are going down. The Chinese, the stock market taking a hit too. Now, another thing is like, okay, we got pound dollar rallying up in this area too, and what we're probably going to be looking at is a relief of this whole Brexit. There's people actually protesting to get back into the Eurozone. Okay, so there could be a change of events there. There's also a coup to get rid of Theresa May. Right now the Brexit is in control of the MPs now. Theresa May had her chance to try to put together a deal, and that's not working out right now, guys. So, but actually you think, oh, well, that's going to hurt the pound. That's what people believe, but you can see that the pound is in the top spots right now. Now, I know it's only Asia, it's a little early, but I think these trends are going to hold for the rest of the week, and we can actually take a look. I'm jumping around because this whole picture, and I teach that in my mentorship, and because you got to understand how the market works together. If you're just trying to say, oh, I want a signal, and you don't understand how this stuff works, the signals will go bad, and you'll be in worse trouble because you'll make some money and then you'll give it all back. I tell you what, it's worse to make a lot of money and then lose it than to never have it at all. So you want to know how this stuff works so you are not taken advantage of. Okay, so let's go ahead and take a look at currencies, and we're going to look at sentiment. And you can see here we got about 73% of retail people are long, 26 are short. That tells us this thing is going to, Aussie is going to go lower. Okay, should go lower, right? Euro, on the other hand, it seems like they might be a little bit right on this. There is a lot of short interest there, but this is the one you want to look at because we have news coming up. Is the pound. 61.86% of traders are short, and 38.14% are long. Okay, now there's no way that the market is going to pay all of these people here. Okay, it just doesn't work that way. Losers pay winners, and there has to be more losers than winners. So, well, that's not fair. The market's not fair, and that's why people don't make money, because they're looking for fairness or balance. Hey, all these people are right. No, they're not. Okay, it just happens that way. Well, that's kind of mean. It's like, yes, it is, unfortunately. Okay, so that's kind of interesting. What we'll see, and we'll look at the charts too. Now, this is not 100%, but there are some imbalances here. When you see huge imbalances on one side, like the peso, a lot of people are long peso, and not very many people are short peso. So dollar peso probably is going to be something that's going to move higher. Dollar yen's like evenly matched. Usually if I look for something like it's like 74 to 25, this is interesting too. Here, Kiwi versus the, people who are short the Kiwi. A lot of people are short, not very many people are long. It might be interesting if we might get a pop in that. But usually that's a risk on currency, so it may go lower. But let's go back. Let's go to the, what I really want to do is go in order and look at the economic calendar, because that way we're not backstabbed by news. You turn your back and you're looking at your charts, and this picture, you're looking at your charts and you're on your computer, blah, 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 and this guy comes up there called the news and bam, hits you in the back of the head, knocks you out, right? That's what usually happens. Why? Because nobody sees it coming, right? Nobody sees this stuff coming. Okay, so we're looking at the, I should filter this for just high impact, medium impact, let's go to the high impact. Let's stick with the high impact. Okay. We have the Reserve Bank of New Zealand interest rate decision. Okay, that's probably why we've got a lot of people who are short. Maybe the previous number is 1.75%. They may seek to get those rates, keep those rates unchanged. That's on Tuesday, right? And we've seen it when they've kept rates unchanged. Sometimes it goes higher. The New Zealand dollar may rally because of this interest rate announcement. This is a big one. Okay. This is probably going to happen like in the afternoon. Trading desks are going to be closed. And usually it's very liquid. And so this is kind of, you want to wait maybe like an hour or so before you want to get into that. Gross domestic product or GDP, 2.6%. That's coming out. US GDP. And that was on a Thursday. 2.4% is a forecast. They look at it actually dropping, and that could hurt the U.S. dollar. If it comes out better than expected or at the previous number, then we could see the dollar rally. I could see the dollar going up to 97. Right now, it's trading at 96.55. I see it going about 97.20. So they might completely ignore the number and still move it to that level anyway. Harmonized index of consumer prices, that is for Eurozone. Previous number was 1.7, and we could probably see a move higher. I think that's what the expectation was. Maybe, yeah, a little bit maybe higher on that. So, but watch the euro. The euro seems to be nearing a bottom, right? But we'll check on that. Tokyo CPI. I'm gonna ignore the Japanese data because right now we're in what we call repatriation flows, where money is leaving the market and moving into, or leaving the major currencies and moving into the yen. Okay, the yen is risk averse, like in case of danger, like we've lost 400 points on the Dow. Then we're gonna the more the money goes, the money flows into the yen. Okay, but anyway, they migrate the money back to the yen anyway because it's that time of the year. Every year around this time, between like March and April, you'll see the yen actually get strong because they repatriate money back into the yen because it's the end of the Japanese fiscal year. They bring their money back, put it on the books, and then they redeploy that money right after the 31st. Okay, so you're seeing this strength in the yen. And it's being exacerbated by the fall in the stock market. So the yen, euro yen short, dollar yen short. The yen being long yen means those yen pairs are falling. Okay. And then Brexit Day. UK is scheduled to leave the EU. Okay. Now I think they've voted. I think they want to have some type of an extension or something like that. So be careful of that. Okay. So there's still. They're asking for extensions. I mean, they're asking for more extensions than, somebody with a bad weave, they need extensions, we had Eurozone Consumer Price Index coming out on Friday, and they're expected, so what we got going on there? I guess they consider it low priority here. It's high, but the previous number was 1.5, and it might tick a little higher. Okay, so let's go ahead and let's go to our financial news, and I want to take a look at a couple of things, big market things here. Mueller did not find, this is top news, guys, breaking news. Mueller was conducting an investigation of Donald Trump to see if he was responsible or conspired with Russia. And this is breaking news. Wall Street expects big rally after Mueller finds Trump campaign did not conspire with Russia. So we can see a big rally on Monday. Now, I warn you about rallies on Monday. Usually we have sells off on Tuesday because there's like low volume on Mondays. So it's kind of weird that let's do this investigation. We're going to stop. We're going to do all this announcement on Sundays. Really? Usually when they announce something on Sunday, they're faking out for Tuesday. So I think we might get a big rally Monday, tomorrow. If the S&P and the Dow all rally, then we can see those yen pairs actually go up on Monday. You'll say, well, Greg was wrong. He said we're going down. Remember Manic Monday. And then after Manic Monday comes, like Linda Blair, turnaround Tuesday. You know, Linda Blair from Exorcist spinning her head around. Well, the market's like that too. And you'll probably throw some green stuff on your, you know, on your lap too, if you're not careful. So watch out for any moves on Monday, because they're probably going to be reversed on Tuesday. Okay. But it said Wall Street expects, can I move this up a little bit? Yeah. Breaking news. Wall Street expects big rally after Mueller finds Trump campaign did not conspire with Russia. Okay. So that's the big headline there. Mueller did not find Trump conspire with Russia. Big news. Okay. And that's all around the world. Financial Times, the UK, and also in Al Jazeera. No conclusion, Trump committed crime, but no exoneration. Attorney General Robert Barr sends summary to long-awaited report by Special Counsel Robert Mueller to Congress. Okay, so this settles and clears the air of a conspiracy or any wrongdoing, and the market doesn't like bad stuff like that. Okay, so it will rally on good news. So we could see a rally in the market. But let's go ahead and now the Friday is a tentative Brexit vote, and it says the UK Parliament will vote to decide on passage of the deal triggering Article 50 with the European Union. The result will likely be projected before the official vote count is announced. Based on early vote counts, a simple majority is needed to pass the bill. Okay, so that's Article 50. This is the day, guys, that we've been waiting for on that. It's like an ongoing drama. Can't wait till it's over so markets can kind of return to normal, I guess. Okay, so let's start with the U.S. dollar index. The U.S. dollar index is a basket of currencies versus the U.S. dollar, and we can see that we've just been kind of moving in a sideways formation for a number of months since December. We've just been in this big choppy range between like 96.50 and 97.56. Like, oh, it's a tradable range, guys. It's not all, not everything can trend. I mean, only 80% of the time does the market actually ranges 20% of the time. 80% of the time it's in a range. So when you do get a trend, it's actually a kind of a rare event, right? Unless you're going down the micro world like I do, I'll drop down to a 5-minute and there's a party every day, right? But anyway, we're here at 96.55 and we've been making these higher highs and higher lows. Okay, so we have the stair-step pattern on the dollar index, and then we have this kind of big bullish candle with two basic day candles kind of moving up, and then we're making these higher lows. We did make a higher low here and a lower low here, so we've got this kind of still an uptrend, and you could probably extend it all the way back here, right? So it looks kind of sort of corrective in nature, but you have to play it as if it came down to support 96 whole number round number, banker support, and then I'm looking for a move maybe to 97.66 and probably a break to 97.20, right? I think we could break this range. We may pull back here a little bit, maybe pull a little bit down tomorrow, because usually when we have good news for the U.S. stock market or the U.S. political system, the dollar actually goes down. The dollar is they designed the dollar to be a safety valve, so people will run to it to help fund the big debt that we can do this deficit spending. So people will buy bonds, and what happens is when the dollar rallies, bond yields fall. And I can show you the TNX, which is the 10-year Treasury note, and we can see, look at this drop off, bam, right? As the stock market goes down, the yields go down because people buy bonds. They go, I want bonds. Give me 2.7. I'm not giving you 2.7%. I'll give you 2.65%. I'll give you 2.5%. It's like, okay, just give me anything. I just want to lock yield because it's safe. Bonds don't, they're typically a safe haven. This is safety, right? And we've been safe before the market was on fire. Guess what? The government would have to had to hike rates in order to get people to buy a bond. You want to buy it for 310? Heck no. How about 3.15? Nah. How about 3.2? Nah. How about 3.25? Okay. Right? But then bad news started to happen, and now people are running into bonds. And when they go into bonds, the price goes up into the bonds, but the yield goes down, right? Because people want the yield before it keeps going. Now, this is an abandoned baby pattern right here. An abandoned baby. I know we've got these really not cool kind of terms in dead cat bounce, abandoned baby, buy when there's blood in the streets. It's a very, it's a dog eat dog kind of market. So if you're kind of squeamish about some of these terms when it comes to the U.S. stock market and the trading, just ignore them. Okay, they've been around for a long time. I didn't make this stuff up. I wouldn't make this stuff up. Okay, so we have an abandoned baby pattern, and so we can see this. So we went from like 2.5%, and yields got down as low as 2.42. Now that's an extreme move, and usually when we have an extreme move like that, we'll have the abandoned baby is actually a bullish pattern. You're like, well, no, it's got, look how bad it is, Greg. This thing could go down to 1%. Yeah, that's exactly what happens. And then what happens, you get a big reversal. We'll get a fill, especially if we have good news tomorrow and the stock market rallies as a result of Mueller's finding that Trump had nothing to do with the Russia intervening in the elections. Well, that's going to send this rate higher, and it should fill that gap. Now, it may fill this gap, may go a little higher, because when price breaks out, it returns to the scene of the crime. I know this is not in the yield, the 10-year Treasury note yield is not on our agenda, but it's really important. It used to be, but I just thought it was really important for you to understand the relationship of interest rates to the direction of the stock market, right? And then what happens is this will go, if you compare it to the yen pairs, the yen pairs go like in the same direction, right? We can maybe go EUR, JPY, and you may have, you'll have this kind of, it's going to drop off. See, it's dropped off here, right? Everybody's kind of like running for safety. Okay. All right. So we understand that. So we know when they're buying bonds, but the price of the bonds is more reflected in the dollar index going up. Why? Because people want the dollar. They need dollar to buy bonds, all right? In order to get those bonds, to get those yields I showed you, they have to have U.S. dollars. So they dump all those other currencies and buy this U.S. dollar. Okay. All right. So that's that on that. You don't normally trade this unless you're trading. But we can see that we had a nice bounce, and we've had this kind of move, kind of a three-wave move up, a little ABC, and maybe we pull back. We pull back a little bit. Maybe pull back down to this 96.16 area where we'll get that possible launch higher. Okay. So what this means is we'll probably see our risk on kind of trades rally tonight, tomorrow, because it's still Sunday here in the States. Okay. Oh, don't want that. Go away. Okay. So we might see a pullback, turnaround Tuesday, and then a rally. Okay. For the U.S. dollar index. And we can see, let's go ahead. So we'll probably see a continual drop in the dollar and then a rally higher with a vengeance. But let's go ahead. So I'm short-term bearish, but medium term for me is like Tuesday. So bullish. Okay. So let's go to the euro. Let's take a look at the euro. And the euro, and let's go to a daily, zoom out a little bit. And we can see a couple of things. I don't, the week before I projected that we'd come back down and test this old level 112.02, and we most certainly did. We broke down below support. We tagged that area, got a little lower than that, then rebounded sharply, right? We did. We have like a double bottom now. We have a tested double bottom, and now we have a rally, right? Now we've got this rally from here. Now we should see some type of a rebound here. We got down as low as 112.76, and we could probably see a pretty sizable move up. This is kind of a Fibonacci relationship there. So we can see a rebound from this 112.92 short-term move though. I'm short-term bullish, medium-term bearish. So I'm talking about maybe tonight, today, and late tomorrow we rally. We might rally into this maybe supply zone right there. We could rally up there, up into here. Wrong color. Okay, we rally up into this area, and then after we rally into that area, we take a drop, and we drop hard. Okay, we resume the drop. This is like a rally in a bear market. Bear market rallies are very subtle. You think that's going higher, and it really doesn't, right? So I think we get a rebound into some maybe the 114.00 area. That may be a really good place to get short and for a move down to, I have a projection of 112.25. Okay. So so I think we go up first, then go to 112.25. Okay. So let's go ahead and move on. Keep it going. I know I took a lot of time giving you that background information, but I hope you found it valuable. And if you do, let me know. We'd love to hear from you. Now here is our Aussie dollar, and not looking too hot. It means like lower swing highs, lower swing lows. This was a nice little trend line break in our rally, but we only got to the banker's resistance, 71.50. We wicked above it. I mean, we got as high as 71.66, but hey, if you took profit 71.50, congratulations. You know, our bankers level traders are killing it. And a big congratulations to Svetlana from Russia. She went ahead. She did like 32% last week. Whoop, whoop. Big congratulations to her. And good trading. Okay, 70.70. Now, I'm bearish on this. I think we go down to 70.50. But we may get a little bit of a rally, a little bit of a relief rally. Now, I don't see us having a big rally. So, I use fibs because the fibs are what we use like on for this Manic Monday, Tuesday kind of thing, right? So I think we get a little bit of a rally. I wouldn't even trade it long, but if you want to dart in and out, Pip and Run style, dart in, maybe go up to like 70.96, maybe 70.100, right? But then from there, I think we drop and we go down to about 70.50. Right, so that's again, I would like to be shorting from these levels down to 70.50 for the Australian dollar, and we might even see the beginnings of that. You can see that this down move is kind of running out of juice, right? And we can even take a trend line across there and say, look, you show up above this trend line, I'm shooting at you, I'm firing at you, boom, click in, get your money, get paid, and then get out, right? But then you'll make your lion's share of your money. You'll probably be made in the short side. Why? Because it's a downtrend. Lower swing highs, lower swing lows. Well, you know, this thing will come up for air, and when it does, you know, lock and load up for some more for a drop. So again, short-term Aussie dollar, short-term bullish, but I'm medium-term bearish. Okay, medium and long-term bearish. Okay, let's keep it going. USD JPY, and let me know if you like it in the chat box. If this is you know, give me your comments. Go ahead and comment below. You know, appreciate your comments, and help me understand what's going on there. Here we go. We got our trend line break. I was looking for a move up. And either 112, whole number, round number held, 00 held, you know. And we got a trend line break. That was my first test of the line, but it didn't bounce and didn't go higher. All right. No harm, no foul, no breakout. So I'll put a buy stop there. If it doesn't click in, guess what? I didn't get it. But the short trade to the trend line worked. And not only that, it kept breaking down, right? See, now we're in repatriation time. Right, 111.98. I think we got as high. Maybe we hit a little 112, and we can go a little lower. Okay, and I'm looking at dollar yen going about 1090, 109 the figure, another round number, banker's number right there. Again, if you want to learn about the bankers levels, I have a free training as well. Click that free training, register for that training, and you know, if you want some help on implementing some of those strategies in your own trading, then go ahead and sign up for a strategy call with one of my team. One of my team will be able to talk to you, ask you questions, and then we'll see, you know, how we can implement those strategies, the whole number, round number, the precision entries and exits into your trade. So if you want that, it's a free call. Normally these calls, you know, $1,000 an hour, but hey, you know, you can go ahead and register for free and talk to us. All right, so we're looking down there. I'm looking actually to the whole number, round number is here, 109 the figure, and I don't know if we'll get much of a rally out of this, you know, because the dollar and the yen, this is being driven by repatriation flows mostly, and fear. But if the fear is taken out, we still are repatriating, right? And then these are like big institutions coming in here, you know, like Honda and Sony, you know, Mitsubishi, you know, they are moving money back into the yen. So these are corporate flows. So that's why you get this big move, then probably another big move down, and maybe one candle down to this level. So I'm medium, short, and long-term bearish on this, to 109 the figure. Okay, and we can even see now. It looks like we might be setting up for a little bit of a bounce, but I don't think we get too high. I mean, we can try a fib projection on that and see a 618, maybe 110.17, maybe. Okay, maybe we double top there. That might be a really great place to get short 10.17, for a shot back down to the 109 the figure, 109.00. I thought I had it down there like that. Okay, well, again, I am bearish on this. Okay, all right, let's keep it going. Let's look at dollar CAD, USD, and my friend Kevin Flores, he's a big dollar CAD fan. Long Island, New York. Let's go. Big shout out to the New York people, Islanders. Okay, here we go. Here was this. I was looking for the slingshot that we would get back up into here. I still think we have an inverted head and shoulders, and this thing looks very bullish. Probably want to retrace all this area, right? And I think we're at the 34.24, and I'm looking at 34.50 as a possible target, a short term, as a medium term target, right? I mean, we could get a little bit of a pullback because of the news out of Washington D.C. But I think eventually, even if we get a little pullback, we still go to the 34.50. I'm looking at 34.50. So that almost takes us to that old high right there, right? So somewhere in there. That's a. I know. It looks like, well, that's not very much, Greg. Well, if you look here, it's actually a little bit more there, right? So we might even go. I mean, we might even come up and then retake that with 34.63 or so, right? But you can see how we've just bottomed, and then we'll retest this for maybe a double top. If we close above it, then hey, 35.00 comes into play, another round number, or 75. The next quarter line comes in at 34.75. Okay, so dollar CAD. Let's go ahead and look at the. Well, I look at CAD. CAD's CAD dollar's rallying, right? Because I guess there's more people flowing into dollar-denominated bonds than they are in CAD-denominated or U.S.-denominated. Actually, it is the oil is denominated in U.S. dollars, but it's benefiting CAD versus other currencies. So what you're finding is a lot of the old traditional correlations are breaking down, if you haven't noticed, you know, where, okay, dollar yen is going down, but dollar CAD's going up, right? So you're getting these weird kind of, and you're going to see, I gave away, the show, yeah, like pound, oh, did I skip pound dollar? It seems like I skipped something. Okay. Yeah, man, I think I did. GBP USD. I think I did. Okay. Yeah, I think I did. Oh, wow, yeah. I think I skipped pound dollar. Okay. So let me go ahead and clear off all these. But yeah, because this is it. This is what you guys want to see, right? Remove all drawing tools and start from scratch, right? Daily chart. And you can see that we've got this kind of stair-step pattern up. Even with all this, I mean, we see these kind of drawdowns. I'm just going to take these last ones there. All right. And we've just got, we pull back down, we rally up. We pull back down, we rally up. We pull back down, and I think we rally up again. I think we actually go up. 3,300, a whole number, round numbers right there. That's a banker's level. Okay. Banker's levels are, they end in 25005075, and then they just repeat 00 255075, then 00 again every 25. So think of a quarter lines. So we're at 3210, and I think we go up to 3300, right? Now we might, now this is kind of a little abandoned baby too. We might get a little bit of a pullback. So I'm short-term bearish, and we'll just flip it around, a little reverse. It's not a little reverse psychology, huh? If it's going up, it'll probably pull back on Sunday, Monday, and then rally on Tuesday, right? So I'm actually, I'm actually medium-term bullish, and I think we go maybe even higher. We could probably get maybe 13400, but at least 13300 is my first target. That's what I'm looking at. It's 100 pips away, and that looks pretty tasty. Let's go to a 1 hour chart, and you can see big move down, big major capitulation, just forcing out those, anyone who was bullish just got washed out. And then this long spike, people bought the wick, you know, people trapped, you know, buyers stepping in, inverted head and shoulders pattern, and we are rallying higher. Okay, so we can see that price is getting ready. It's inverted head and shoulder, and then we're probably looking, maybe we could probably retest 3381 or 3400. But at least I'm going for 3300 as a possible target. Okay. Yeah, I must have skipped those. I don't know. Okay, EUR USD. I must have. Yeah, I skipped that. I think we. I think I did go over that one though. Okay. So I think the pound dollar is one that I skipped. But I think we go to on the euro again. If I missed it, 112.25 or so. We're at 112. 112.93 or so. I think we go down to 25. I think we go way down. Though we might get a short-term pop, but I'm actually looking for down here somewhere for our drop. We might need we're probably oversold or oversold. So we might see a little bit of a rebound and then our drop. So again, I'm short-term bullish, but medium and longer-term bearish on the euro. Okay. All right, let's go to, we were on dollar CAD, and I wanted to logically go over to WTI crude. I'm going to go to U.S. oil. That's the ticker there. And we can see that when we broke the trend line, we barely got to the demand zone. We didn't go deep in the zone. We did go up to the 60 area, okay, to 50% retracement. And we have oil still rallying higher along this 13-period moving average. We did not go into the zone, just barely tagged it. And then, but I was looking for a continual move up to 64. And we went down a little bit or sideways. And I'm actually still, I'm slightly bearish. Slightly bearish. Why? Because we're at 50% retracement, 59.63, and we have a little, maybe an evening star pattern right there. So we got a new trend line there. But I think we just come back down a little bit, and I'm looking for WTI to get down about where to like 58 and a quarter, and then from 50 and a quarter we may actually bounce. So I'm actually medium term bearish, but longer term bullish. Okay, so I think we come down to like 58 point, like probably another, what is that, another $1 and $1.50 or so down. Okay, and we can look that right. So here we go. So there, that was a big kind of like sell off. This is probably some type of a big move up, and then we might see a little bit of a pullback, maybe down here to this. Looking for a move down to like 58.25 or so. It's like almost a retest of the low, right? Retest of the low that we had on Friday. Okay, and UK oil or Brent crude, we're at 66.89, and I'm looking for a move to about 65.50, and that, and so 65.50. I'm actually looking for a bigger correction down there, and you know why? Because we've got, looks like there's a fib level 618 level there. Yeah, there it is. The 618 is right around this neighborhood. So I look for a price to maybe bounce in there, maybe give us an opportunity to go long. There's a little hump of some price action there, which could act as some support, little maybe demand zone right there, and so that'd be a nice place to get long or to short down to that area. This downward move is very bearish, and we're rising up against this tide. So we got this tidal action that's down, and we're kind of like counter current. So I think one more time to wash out any bulls, and then we'll be ready to get back long again. All right, and let's go and take a look at gold, XAUUSD. All right, let's get a daily chart there. And we did not retest that low at 1280, and we didn't come down here. So I was completely off on that one. In fact, price kind of turned up. That doesn't mean it won't go down a little bit, but really you can't really argue with the trend. Right now we broke the trend line, and now we've crossed back above the 13 period EMA, which I use as trend direction. So we crawl back below, above, we broke bottom below. This looks bullish to me, and I'm bullish to about the maybe 13 and a quarter, maybe 13.30 on gold. Okay, as long as this trend line holds, I mean, now we're above this axis. Old resistance now is support, and so now as long as we stay above 1300, we could see 1330, 1340 on gold. So I'm bullish on gold. I was bearish, because what we're seeing now is the breakdown of these correlations, where, okay, well, as long as we have the dollar rallying, we'll have gold weakening. Now we're seeing both gold and the dollar rally, and that is we're in a new normal. Okay, so there you go. And the silver, I'm slightly bullish on that, XAGUSD. And again, I was looking for a push down to the 618. Didn't get there. Buyer stepped in. Institutional buyer stepped in hard, pushed this up. Big shoot down. And, you know, and now we're moving sideways. I mean, we're above the 13 EMA, moving sideways at the 38% retracement. Lots of wicks and no confirmation. So, I mean, when you get something like that, it's like, oh, well, you know, it's a coin flip. So I have no edge there. So if I wanted to trade a metal, I'd trade gold. Silver doesn't seem very attractive to me, unless we get a break below 1529 and we go down to 1512. I mean, this looks kind of corrective. and I'd like to see the 1498 retested, but this thing could keep crawling along this line and keep going higher. So I'm slightly bullish. Maybe we go to 1550 or so. Okay, S&P 500. Now, as of Friday, I was really extreme, like, okay, this thing is probably going to drop on the open, but based on what we got there. Now, so we've got this, and I was looking for a bigger correction. We didn't really get that. We did get a correction. I don't think if we corrected that much in a day, we'll probably, it'll probably be the end of the world, right? To correct. But I mean, we survived big corrections before. I mean, look at this drop here. This is like, everybody's like, oh, wow, this one here, 400 points. Oh my God. This wasn't 400 though. This is the S&P. But this was a big candle there. And, but we're hitting the trend line. And we're rallying off. We went down. Yes, it did. But if you connected this swing point down here from December 26th to this swing point here on March 8th, you have this red trend line. We can get rid of this one because this one broke. It may be tested later on. My friend Stryker, he keeps all those trend lines on. He has some really great analysis. So we have this. So what happened was price broke down. Based on people like interest rates, no interest rate hikes. Man, the global economy is slowing down even more. So we saw this drop. It dropped right, orderly drop right to a trend line. And usually we have bounces at trend lines, right? So let's see. Let's drop down to a 4-hour chart, zoom on in, and you can see that momentum was slowing down as we were going into the close. Let's look at a 1-hour chart, and we can see 2880, whole number, round number, 00, 2800. We could see a bounce, right? And a bounce to maybe retest 2822. Now, I think we get a bounce. I think we bounce higher. Good news for Donald Trump, right? I think we get a rally. However, I think after that rally fades, we go hard. Maybe we come down to like 2775. Oh, like that right there. Right. About 2775. So I am short-term bullish on this S&P 500, longer-term bearish, okay? So we covered the normal currencies, but I still think this is the market condition is generally a risk-off scenario, okay? Now, usually in a risk-off scenario are the Armageddon twins. And the Armageddon twins are two currencies which we can trade if the world's still around. Not this big gloom and doom, but usually when people get over, when they see the market go, I mean, take the 1920s when the stock market crashed, people literally climbed out windows and jumped to their death, committed suicide because the stock market was going down. They had so much invested in the U.S. stock market that many people hung themselves and blew their brains out because of these markets. And I encourage you guys, only trade with money that you can afford to lose. And anytime you want money, sleep money that you can lose or trade and be able to sleep at night. Now, if you trade Pip and Run style, you're in and out in an hour or so, and then you're going to sleep, right? So you don't have that overnight exposure. However, you got these guys, I call them the Armageddon twins, or Apocalypse twins, Pound Aussie and Euro Aussie. Risk is off when they start to rise. Now, if we look at like a chart from like 2008, we can see that the Pound Aussie and the Euro Aussie, when you're long, when you think that things are bad, the Pound Aussie usually rallies, okay? And we'll go to a daily, and you can see that when we have geopolitical unrest, if you go back to like 2008, you can see that big spike, the global financial crisis, it spikes, right? Now, the spike is always in a downtrend. Why? Because, everything actually gets better right? But at the time, right, when the stock market is collapsing to all-time lows, pound Aussie is rallying, all right? Anytime we've had, you know, different geopolitical unrests, you want to look at the pound Aussie. Euro Aussie is another one. That's the other, the Armageddon or Apocalypse twins. And it looks like it could rally as well. You know, we have really bad news, like we look back to 2008. We can see that this, you know, anytime we've had, you know, government shutdown, look at that. 2008, global collapse of the financial markets, pound, Euro Aussie. Why people are dumping a high yielding currency like Aussie and buying the euro. That's the world turned upside down. You don't sell Aussie. You're getting out of risk for safety. People are bringing their money back to Europe as opposed to leaving Australia where it's shrimp and Barbie time and it's a party. Good day, mate. Right? So that's when you see the Aussie going down. It's usually a sign that it's a risk off. People are running into bonds, they're running into yen, they're running into stuff that doesn't pay anything. They want it to be safe. Okay, they're running back to their own country with their money. You know, euro. You know, they're running back off Aussie into the euro. They're running out of commodities. They're running into safe havens, and like the Bund, they're buying those bonds. So let me tell you my projections for those two pairs. I'm looking at Euro Aussie. We're currently, let's go down to a 1 hour chart. Let me go in order though. Let me go to the pound Aussie and I'll give you my rundown there and then we'll wrap things up. Okay. Pound Aussie, I think it's going to go skyrocket. I think, you know, we're going to have good news because of yesterday, because of the Mueller report. It's going to be good for Trump, good for the market. We can see pound Aussie actually pull back. So I'm short term bearish. All right. But I am medium term bullish. I think we go to, we're at 1.8651. I think we go to 188 the figure. Okay. Based on my analysis. I think we go way up here. I think we blow out. Why? We've got like this blowout low back here. We tested some old support. And we tested it. They try to close below, try to bring in the good news, and then bam. All right. And so this bam, the next bam is up here, 188, the whole number, round number. This is where some old resistance is located. And this thing is on a rocket, you know, to retrace all this down, all this good news we had. So now we're going to retrace all that. So pound Aussie, currently at 186.52. I'm looking at 188. Now, I'm not saying it's going to, you know, hit there right away, but I'm very, very short, minimum short-term bearish, like 1 day. But the rest of the week and probably next week, looking at this to go to the moon. That's my moonshot there. Euro Aussie, the other moonshot. I have a third moonshot too. Here's your Euro Aussie selling off. Probably somebody got a hold of the Mueller report. Probably Friday or Thursday. Let me take a look at that. Okay, yeah. Let me get out of this. So look, we had an abandoned baby and it filled the gap and dropped. And so now we'll probably come back and rally hard to the upside maybe after tomorrow, okay? Or like after Monday. So I'm looking at Euro Aussie, possibly maybe going to one. We're currently trading at 159.50, and I think we go up to 160.50. So about 100 pips, about 90 pips maybe. Yeah, I think we go much higher. 160.50, right? So that is that. We want you look for that. No, yeah, the one I'm going to give you two is, you know, like any yen pair. I look at Aussie. Now Aussie and not, yeah, Aussie and probably get killed, right? Yeah. So this looks really, I mean, drop off. Like once this thing like breaks this low, I mean, we're probably gonna go in free fall. Aussie yen, okay, and I don't have a projection target in Aussie yen. Let me see if now we're sitting at support there, a couple of 1, 2, 3, 4 supports. So we may come back and retest the breakout point, maybe 78.53. So I'm kind of like short term bullish, but then after we retrace, you know, maybe like Tuesday or Wednesday, we would see this. And that's what throws people off, because what will happen is you're so eager to trade on Sunday, you put the trade on and then you'll turn off the computer, and then around Wednesday you're like going, wow, what happened? You know, and that's what happens. Things turn around. So I'm looking for a turnaround, maybe a rally up, and then a pop and drop on Aussie yen. And this could go all the way. I mean, this could go. See, that's the thing about this wick. This was our flash crash. I mean, we basically moved 300 pips in 15 minutes. It was huge. Okay. We don't know if that were real orders there, or maybe the market is going to ignore this. Because either this is going to be your bottom there, or we can go back down and have another flash crash and retest it down to 71, right? I mean, down to 70.64. So that is potentially what could happen. Now, what could nullify this is we get back above 79.38. We can crack that. If we can crack that, then we're good. I mean, we can look at this and say, look, we can crack this top of this trend line, we're home free. But right now we're sitting on support. Yes, we're sitting on support, and we can get a rally. But this was a breakout point, and sometimes we go RTTSE, price returns to the scene of the crime. So we could return to the scene of the crime where we first broke out, test that. It sniffs around like a calf at a new gate, maybe looking a dog licking a new bone. I don't know about that. And then it takes a bite of it, and then forget about it. And then they drop, right? So that's what's going to happen with Aussie yen. Okay, so that is that. Now, what I want to do is if you're like saying, well, Greg, man, there's a lot of information. I sure don't want to go through all that, this whole video again. Don't you have something that maybe like some type of summary or a cheat sheet or something like that can possibly help us out or so? And I go, yeah, I got something like that. But let me go ahead and yeah, I have all here in this wonderful little cheat sheet link that I can give to you. But go ahead and click the link in right at the bottom in the YouTube channel. There is a link, not that link that's there, but you'll see it. You gotta look at the comments or the description, and there's a link to the Outlook summary. And the Outlook summary, you'll get the link to that. You'll have to give me your email address. Haha. Okay. And I will spam you. Haha. No, I won't spam you. But I will tell you what's going on, and then you'll know if I have any changes or updates to this Outlook. Okay. So if you want this this cheat sheet, which I've cleverly put in witness protection program, you can get a copy of it too. Right. All right, guys. It's been so good being with you. Let me know and down below. Give me some comments. Please like, subscribe, and and all that good stuff. Turn on notifications so in case I post when I post a video, you'll be ready. And also join me for my Pip and Run scalping boot camp. No, you won't get all that stuff in the mail. It'll all be digital. Don't worry. I won't clutter your house with that. But I tell you what, you want to change your trading and change your life, then join me with the Elite Traders Pip and Run Forex Scalping Boot Camp and apply. EliteTradersUniversity.com/apply. This is Greg McLeod for the Elite Traders University. Signing out. Peace and pips. Happy pipping. Cheers. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!